Are you hopeful, not confident, when you're overweight equities? Is that what we are now?
I am hopeful, and I'm still confident, but maybe less so compared to before. And the key question here is around inflation. So we set out at the beginning of the year that this is a year of two parts. The first part will be supported by the narrative of immaculate disinflation, and the second part will be characterized by the reality of inflation roller coaster and higher for longer. And the last 1 week feels a lot like part two. And a question that we're asking ourselves is if this is a blip or if this is part two, which is why I am confident but less so compared to before. I think this is still a Fed that wants to cut.
Let's do some scenario analysis then.
Yeah.
Let's say we have pulled forward the second half call. What would that mean for stocks?
I think that will be negative. If you think about what stocks are priced for at this current juncture, so far U.S. equities are up more than 6% on the year, and rate cuts at the beginning of the year we had 7 priced in markets, and now there are less than 2. So the only offsetting factor supporting strong equity momentum was earnings, but right now the bar for earnings to surprise to the upside has risen as well. So the equity momentum is having to clear an ever-rising bar, which is why it feels a bit different compared to before.
Wei, are you more concerned about the earnings picture than you are rates?
Well, I'm positive around earnings picture. You know, like if you look at kind of the growth dynamics that we have experienced so far, we have had positive surprise to growth. We have had positive surprise to inflation and the boost to nominal growth, which then translates into earnings have been supportive of equity momentum, right? So I'm actually positive on earnings. I'm just recognizing that now the markets are expecting S&P 500 to deliver 11% earnings growth for 2024 versus a historical average of 7%. The bar is higher. I'm a bit nervous, but I still think that there's more room for AI as a theme to deliver. And I also think that there is room for earnings momentum to broaden out as well, given the cyclical manufacturing kind of uptick that we're seeing coming through in the data. So we like industrials, we like energy, we like materials for that reason. These are the sectors that are seeing a bit of an earnings outward revisions as well. So we like all of those kind of cyclical aspects, but on top of the AI theme that is still coming through quite strong.